Good morning and welcome to our final session of panel. We have been discussing and bringing to you Zipper's interpretation of this year's 98th Agriculture and Commercial Show, which is under a theme fostering trade and investment. And today we are going to look at a topic which will be focusing on promoting investments and mobilizing finance for industrialization. Remember, Zipper is still exhibiting, and you can visit our stand. We are in Jubilee Hall, stand number 23. Find time to go through our stand, and you'll get more insights on topics that we started discussing on Tuesday, on Wednesday. So today we are going to continue discussing, giving you our interpretation of the theme. And just to give a background, Zambia's economic outlook remains positive, supported by ongoing macroeconomic reforms, improved trade, and renewed investments in productive sectors. The 2026-2028 medium-term macroeconomic framework projects average economic growth rate of 6% over the medium term. This growth outlook is expected to be driven largely by recovering in the mining and agriculture sectors, alongside wholesale and retail trade, ICT, and financial and insurance services. While these projections reflect growing confidence in Zambia's economic recovery, sustaining higher and more inclusive growth will require broadening the country's productive base beyond traditional sectors. ZIPA has consistently been emphasizing accelerating structural transformation by improving the investment climate, promoting value addition, expanding access to finance, and strengthening market linkages for domestic and regional markets. And today we bring you a very important topic, which is promoting investment and mobilizing finance for industrialization. We are streaming live for those who are following us on our Facebook and our various social medias. You can interact with us by sending your comments, and we'll be able to get feedback from you. So today, to discuss this topic, I am joined by experts from institutions, and on my panel, I have got Mr. Walusungu Banda, who is a technical assistant, organization strategy and performance coordinator from CEC. Good morning, sir. Thank you. And I have Ms. Mwanda Piri, who is the director, corporate strategy from Zambia Development Agency. Good morning, Ms. Mwanda. I am also joined by Mr. Leonard Mwanza, who is a chief executive officer from Bankers Association of Zambia. Good morning, sir. And last but not the least, I have Mr. Chinyanta Chikula, who is a business development and grants from Ministry of Small, Medium and Enterprise Development. Again, good morning, sir. So I'll start off with a general question for everyone, and I'll begin with Mr. Walusungu. From your perspective, what is the biggest challenge affecting the growth of trade and investment in Zambia, and what should be done to address it? Just in general, looking at this year's theme, which is fostering trade and investment.
Investment in Zambia that is affecting the trade and investment in Zambia is largely to do with the industrial base that we have in our country.
Yes.
So if you look at historically that the great focus of our country in terms of development has
Yes.
been along the line of rail.
Yeah.
And then if you look at other parts of the country, you find relatively non-existent industries.
Yeah.
If you are coming from the Historically, we had industries in these countries, and then after those policy reforms that were done in 1991,
Mm-hmm.
you saw there was a privatization that had taken place.
Yeah.
And most of the industries that were established by then in the First Republic, you find that they were privatized and became defunct.
Mm-hmm.
And then if you look at largely that most of these industries were state-owned industries.
Yes.
They were not private-driven.
Yes.
So after reforms in 1991, we saw liberalization coming into place.
Mm-hmm.
And then there was free market economy,
Yeah.
where the private sector was given a leverage
Mm-hmm.
to participate in these in the economy. But the private sector took advantage where there was already existing infrastructure that
Yeah.
was there. That's why you have seen a lot of development along the line of rail,
Yeah.
leaving a big disadvantage in these places like talk of Chavuma, talk
Okay.
of Shangombo.
Okay.
Uh, a private player would want to see public goods being developed, like roads, infrastructure, which the government is currently doing.
Yes.
So now, for them to invest in those areas, it becomes a big challenge on the part of the private player.
Thank you.
Thank you.
Thank you very much. Moving to Miss Mwanda, what would you say would be the biggest challenge affecting the growth of trade and investment in Zambia?
All right. Thank you so much for that question, Emmanuel. And perhaps I'll tie it to, I mean, in responding to this question, right, you have to
Yes.
understand what draws capital, right? Why capital flows to particular countries,
Yes.
why it's going to those particular investment destinations. So we have traditional factors that remain strong pull factors.
Yeah.
We're looking at your macroeconomic stability.
Yes.
My colleague alluded to the history and many other issues to do with the productive capacity and productivity issues. But looking at more current times, right? So key factors, macroeconomic stability.
Yes.
We're looking at policy consistency and predictability.
Mm-hmm.
Investors, they want to be, reassured that the
Yeah.
policies that have been put in place will apply, in the event that they're looking to export to a particular country, that those requirements won't change.
Yeah.
Or even in terms of just the fiscal policies, that there won't be, the constant changes. So there's that.
Yeah.
There's infrastructure, which has been alluded to. Those are
Yes.
key factors that tend to pull investments and foster trade as well. We're looking at other factors such as even your human capital,
Yes.
right? How skilled is it? Do you have a strong human capital to support production and trade? And then there are other key factors, such as do you have resource endowments that will naturally pull
Yes.
investors? And we've seen the interest with
Yes.
the, critical raw materials that we have. I mean, in the recent past, we have seen challenges that have affected the macroeconomic environment, but we have seen huge efforts, right, by the government in terms of debt restructuring. 94% in principle restructured, which is helping to improve the macroeconomic environment. It has led to improvements in terms of sovereign credit ratings for the country, which essentially means the risk for Zambia has reduced, and it then does allow us to have access to more international capital. So there have been those factors. One that we have to talk about as well is obviously access to reliable electricity supply, because that's critical for any investment project. They need to be reassured that they'll be able to carry out their production, at the level, at the capacity utilization that they envisage. So we have had challenges in that respect, but that in itself is also an opportunity for investment.
Exactly.
And I'll use this opportunity just to highlight, recently we were just sharing information as ZDA on the level of investment we've actualized from 2021 to the first half of 2026. And you will find that energy is one of the leading sectors. So there's a lot of interest we're building in terms of generation capacity. So much as it's a problem, on one hand, it's also exactly an opportunity. And then access to finance, I have to mention this one because it remains a common challenge that affects the ability of businesses to be able to expand, get the machinery, technology to make them be very competitive. So this remains a huge challenge, and later on I'll be able to share what we're doing as IDEA to address this.
Great. And for our followers, please you can write your messages or your question, and we'll be able to also get back to you. But let me move to Mr. Chinyanta. From MSMED perspective, what would you say is the most challenges that Zambia is facing in terms of promoting, fostering trade and investment?
Okay, thank you very much, Emmanuel,
Yes.
for that brilliant question. And I think my two colleagues, Walusungu and Mwanda, have done justice to the
Yes.
question. I'll just probably give my perspective
Yeah.
of the question. And for me, I'll boil it down to capacity.
Capacity.
And basically, when I say capacity, we have been able to identify through research and other methods that there are three major constraints that constrain the growth of emerging startups and small firms, as well as cooperatives. And this is basically access to finance, access to markets, and the capacity or the skills or the technology that they have. So in these three areas, if we're able to unlock that capacity through, is it technology, through providing the infrastructure, through providing the training that they need, through unlocking some form of security that they need for their financing, or some kind of value that we can tap through the contracts that they currently have, the cash flow, then we are unlocking that capacity, which will enable these businesses to grow. As a ministry, this is what we have focused on. Capacity. We believe that capacity is the first, because it will then bring the access to affordable financing, whether it is national or international. It will bring the access to the markets, whether it is through a supply development program, where they're being properly linked and being enabled to deliver the quality, the on the right time and at the right price. It will also deliver on whether they have the type of technology that will enable them to leverage and produce goods at the scale that it will be profitable for them to grow. So basically, for us as a Ministry of Small and Medium, we focus on building that capacity, and of course we work with Citizens Economic Empowerment Commission and ZDA and many other partners, including the financial sector, to unlock this capacity. Thank you.
Thank you very much. And as I move to Mr. Mwanza, finance is always a big elephant in the room. Whenever you're discussing development matters, financing never misses. So what would you say are the main critical challenges that is Zambia is facing at large from your banking sector perspective in terms of fostering trade and investment?
Right. So yes, indeed, access to finance is always a topical issue, much appreciated, because that's what helps businesses and SMEs to grow. But I think Chinyanta already touched on the issues. Capacity, access to market. I think those are key. Now, capacity talks about, are you keeping your records in a proper way? Do you understand your business properly? And then access to market is extremely important and sometimes not discussed in detail. When you say access to market, where are you going to sell your product, your service, your good? So if you don't have that key line where you're going to sell what you're producing, then it creates a gap. It creates a gap because from a banker's mind, then you won't see the cash flows, right? Because the banker is interested in the cash flows, because that's what will convince a banker that yes, there's capacity, there's access to market. So what we tend to see is that for businesses that are operating within an anchor industry architecture, especially SMEs, they tend to have easy access to funding. The conversation with the bankers is much softer and easier, because first of all, we are dealing with the market is available. You can verify that market, you can test and feel it.
And feel it.
And then you can say, fair enough. This is a person that is dealing in agro products. Who, from where? Where do they get these products?
Yes.
Is it from Zamseed? Zamseed is available. They are looking for someone to sell their seed.
Yeah.
Is it Universal Fertilizer? Yes, Universal Fertilizer is producing fertilizer, and they need someone to sell that fertilizer on their behalf as an intermediary to the end consumer.
Yes.
So most SMEs and businesses that operate within an anchor business model, whether it's agro processing, manufacturing, even a basic example I'll give, the issue of bread distribution, right?
Yes.
Someone is making bread, they must be assured of where the wheat will come from. That's from the farmer. But downstream, they must be assured that the grocer in a compound, in a township, or in the supermarket, they're able to sell that bread, and they're able to determine the shelf life, the time it takes to sell the bread, how many quantities they can supply to a particular location. Those are the things that create cash flows.
Yes.
Now, if that cash flow is outside this visibility of a lender, it becomes a deeper and difficult conversation.
Yeah.
So I think creating an anchor industry model like we are seeing in the mines, the 20%, is it local content
Local content
participation?
strategy. Yeah.
Yeah. So what you're going to see is that you will see banks saying, I can actually finance your invoice. I can give you an invoice discounting facility because I know that you are being assured that this particular mine company whom I already deal with at a corporate level
Yes.
is my client. I can assure you that they'll pay me. I can give you the cash flow upfront. But let me maybe go back to your point of are there bottlenecks in terms of trade finance? Are we seeing growth in terms of trade, maybe export-based trade? I think we're making some kind of good progress.
Okay.
I was just looking at some statistics. Non-traditional exports are now hitting above 2 billion United States dollars. It's a good number. We are at least making some progress, and it's coming from critical minerals like nickel. It's coming from key industry ingredients that are required in the region like sulfur. It's coming from export of agricultural produce.
Yes.
I think when you say you're exporting maize, it's bringing in that. So when you add all those, including just the production of household goods,
Yes.
which are going across the borders, so all those things, when you sum them up, you see that we are a bit increasing in terms of the contribution towards non-traditional exports.
Thank you. So let me because we've touched on that, let me go to a specific question. What financing products then, because you've mentioned all these, somebody here maybe following would want to know what financing products are currently available to support SMEs, farmers, agribusiness, as well as manufacturing, and how can businesses improve their chances of accessing them?
So products are available, whether you're looking at working capital financing, overdrafts, or for business expansion. The products are there. The report we see are segmented in all the key sectors of the economy. Among the most supported, actually, is manufacturing. It tops the list. When we say manufacturing, we're talking about every sector of manufacturing, whether they're agro processing, they're into equipment manufacturing, all those things. I think they are the key most supported industry from the banking sector. And we've seen that there's been growth in the manufacturing sector.
Okay.
Talk of pharmaceuticals, talk of agri-based products. We are almost self-sufficient as a country.
Yes.
Then agriculture-based businesses, they are among the most supported. Energy, you've seen that we are now diversifying. We are moving towards alternative energy solutions. Solar is key. You're seeing this big project being launched, 200 megawatts Samba, the Timpi in Kitwe, and a lot more others. So support goes, and the products are available. But I must also mention that when you talk of, let's say, the small and medium enterprises, they are not a specific segment per se.
Yes.
They cut across all segments of the economy. So if you're in the manufacturing sector, there will be that small business that supplies a big manufacturing company.
Yes.
It goes to all the other sectors. So every major sector has a downstream business element where the SMEs fall. And I think in terms of support, SMEs are being supported.
Okay.
So if you are going to maybe focus on the SMEs alone, there's a loan book of around 14 billion that is outstanding right
Mhm.
now
Mhm.
to SMEs across all these various segments of the economy.
Mhm.
So it shows that there is effort. It shows that practically money is flowing from
Yes.
the banks to
Yes.
those SMEs. And I think, as I said, where you have an aggregator model,
Aggregating model.
correct, it
Mm.
becomes much easier to have a conversation. For instance, if you sell cement and you want some working capital support, right? And you know that you're going to get that cement either from Chilanga Cement or Sinoma. So you have already created a market for your cement, but you
Yes.
also have a reliable supply. So the bank can come in to give you some kind of bridging finance, whether it's trade financing,
Yes.
whether it's the money that you want to just expand in terms of working capital support to buy your equipment, or
Yes.
if you're in the transport sector, I mean, even the trucks you see on the roads,
Mhm.
they are supported.
Yes.
Someone may want to increase their fleet to move copper out of Zambia or whatever equipment they want to buy in.
Mhm.
Those products are available. I think the figure I mentioned is
Yeah.
14 billion is not a small amount of money that we are saying aggregatory. That's what is sitting
Sitting.
with the various SMEs, not the entire loan book for the industry,
Mhm.
just segmenting on the small, medium
Okay.
enterprises.
Let me just pause you from there. Let me move to ZDA because there is always a linkage between attracting investment as well as what you are speaking to finance. So let me move to Miss Mwanda. We from all the submission we've seen that key sectors, agriculture, mining, manufacturing, you are saying they are thriving or they are doing well. But I wanted to find out from ZDA, what are the main challenges you are facing as ZDA in attracting investment, particularly in sectors such as agriculture, agro processing, and manufacturing, and how is ZDA helping to address them?
I have to concur with Mr. Mwanza. These sectors are actually thriving. And allow me to just point to some statistics. So despite the headwinds that we have faced, the severe drought, the impact of that on energy supply, if you look at the economic growth rate for 2025, just to give you one data point, it still remained quite resilient at 3.8%. And then if you look at manufacturing in terms of the growth, it actually grew faster than the overall economy, about 7.7%. And then from manufacturing, if you tease out the subsector for agro processing, that was equally quite strong. So essentially what you do see is that despite the challenges that have been there, we're still attracting significant investments, and we still see these sectors growing. They haven't contracted, which is great. Notwithstanding, I still will touch on some of the challenges, and I alluded to them earlier, but perhaps I'll focus more on what we're doing as ZDA.
Yes.
So for instance, energy is a big one, because if you're thinking about commercial farming, if you're thinking about even improving productivity when it comes to agriculture, you need irrigation, and that requires electricity, right? If you're thinking about just basic production of goods and services as well, agro processing, your machines being able to run, you need reliable electricity supply. And the industry does also talk about the cost of that electricity too. So as ZDA, we are an investment promotion agency. Though we think ourselves as being a development agency, because our mandate goes beyond just promoting investments and facilitating. We do some of the things that my colleagues alluded to, helping enterprises grow. So providing business development services to make them be productive, because their challenges are on productivity. We facilitate access to markets through trade missions, through different trade fairs that we undertake. But coming to electricity, what we've been doing to help address the challenge there is to promote investments in energy. It's a priority sector, so it is incentivized. The incentives that help to reduce the capital investments. So essentially, you're able to bring in capital equipment, for instance, which qualifies duty free. You are also eligible to access accelerated depreciation. And what that does is it reduces your capital investment overall and helps to improve your early year cash flows. So making your project a bit more more profitable, viable.
Yeah.
So we aggressively promote investments through
I like that,
different.
aggressively.
No, we really do.
Yes.
And allow me to just speak to
Yeah.
some numbers. So in
Mhm.
energy, from 2021 to June 30th,
Mm.
we have attracted about 1.4 billion
Yeah.
worth of investments. This is
Great,
actualized,
great.
not
Mm.
even just the commitments.
Actualized investments.
Exactly.
Okay.
And
Okay.
just to mention, ZDA does not capture all investors in the country because it's not mandatory,
Mhm.
at least not yet.
Yeah.
So this means we're only giving you a fraction of the investments, but we
Okay.
keep seeing many more. If you look at ERB's reports,
Yeah.
for instance, in 2025, nearly about 1,600 megawatts worth of projects
Mhm.
were given permits to commence construction,
Yeah.
and we're currently sitting at about 4,100 in terms of generation
Okay, okay.
capacity. So you can see
Mm.
that with these added investments, we will continue to expand. And as ZDA, beyond just promoting Zambia as being an attractive investment
Yeah.
destination, we facilitate, and that is important because facilitation means not only are you getting a license with ZDA, but
Yes.
we work with various institutions to ensure that those other secondary licenses are obtained in a relatively shorter period of time.
Yes.
That's part of our value proposition. So if you need permits from, say, the local authorities, if you need to access land for your solar project, for
Yes.
instance, right? Part of what we do is engage with the various ministries, entities to be able to support investment projects so that we get them to take off.
Yeah.
And allow me to just mention a few other things
Sure.
that we are doing as well. So access to finance is a problem.
Yeah.
And one of the projects we're very excited about is the Zambia Investment Deal Room.
Okay.
We have to give credit to the president because it was his brainchild.
Please mention that again. Maybe somebody did not get
The
it.
Zambia Investment Deal Room, Zaida.
Okay.
Yes.
Good.
So essentially, it's a digital investment matchmaking platform, which
Yeah.
is allowing Zambian businesses that
Mhm.
are seeking funds
Yeah.
to be able to interact with local, regional, as well as international funders who are
Yeah.
looking for investment opportunities in
Okay.
Zambia. So the way this platform has been done, it's digital,
Mhm.
which means your project has visibility in real time.
Okay.
I mean, we undertake a lot of initiatives to promote projects,
Yeah.
based on events. But with this platform, it means 24/7 visibility of your project, not just to local investors, but to a wider range of funders. So we're
Okay.
talking about your commercial banks.
Yes.
We're talking about your development financial institutions. We're
Yes.
talking about venture capitalists, right? We're talking about impact investors,
Yeah.
a whole different list, institutional funders as well, a whole different, or rather variety of funders.
Yes.
And the platform is great in the sense that for investors, because sometimes for international investors,
Yeah.
they have expressed not being able to know where to find projects.
Yeah.
So the transaction cost of finding those
Finding
projects
the
is quite
projects,
high.
yeah.
Yes. So with this platform, we have put in place certain criteria
Mhm.
because we need quality projects. We need to be able to have projects that are relatively viable, right? So there's a criteria. We're doing due diligence. There's a de-risking element that's already embedded,
Yes.
so that investors, funders have access to a pipeline of projects that is quite credible,
Yeah.
thereby facilitating for these deals to be done.
Okay.
And I'm excited to report that we have over 270 projects currently,
Already.
yes, that are looking for funding,
Okay.
and we're building the pipeline of funders as well. So just some exciting initiatives that are in place.
This is great, and I know, especially from small and medium enterprises who may be listening, obviously that is great information that I think somebody would want to maybe get further information on. But let me move to Minister of Small and Medium Enterprise before I come to CAC. I think great information here, great programs, access to finance and all. But I think I wanted to get from Mr. Chinyanta. I think many MSMEs access to finance remains a challenge for many entrepreneurs, even as we have all these a platform. But how is the ministry working with institutions like ZDA? I think we have BOZ here, and other development partner to improve access to affordable finance, or rather connect MSMEs to these great opportunities we are already hearing here?
Okay, thank you very much for that brilliant question, Emmanuel. And it's the approach that we take. Basically, we take an ecosystem-wide approach, and all of these are to unlock what is termed alternative financing. Now, alternative financing may have different angles to it, depending on where you're standing.
Yes.
And as government, directly through treasury support, when the ministry was set up in 2021, Citizens Economic Empowerment Commission used to receive about 45 million on the books. So we advocated and we pushed so that they could increase the funding towards this institution.
Yes.
These resources come to the ministry and then they are transferred to Citizens Economic Empowerment Commission.
Yes.
And over the years, we have grown to about 515 million that we send to Citizens Economic Empowerment Commission for them to roll out this financing to the SMEs.
Yes.
And I think currently they should have about 1.2 billion in that fund, isn't it, Walasungu? Somewhere there. And then we also have other measures that we have been encouraging. So one of our mandate issues has been to encourage the development of credit guarantees. And if you look in that space, the credit guarantee scheme is this year, I think, according to the Yellow Book, going to receive about 850 million kwacha.
Yes.
And I think they were starting from a low place of maybe, was it 50 million or 100 million kwacha. So you can see that even this required advocacy. It needed to show the case that SMEs are bankable.
Yeah.
They are safe. So we had to come into that space and sort of like create the incentives for the financial institutions
Yes.
to fund these institutions. And the credit guarantees are one of the best initiatives that go to support debt financing.
Yeah.
And then you also have initiatives around equity financing, which is basically your stock exchange stories or securities exchange. So we have the Securities Exchange Commission, which from around 2021 then introduced some initiatives that were intended to support SMEs. And this space has been opening up. Currently, I hear they have the alternative financing option or something like that. Luce had an option called the GEM portal, which was dedicated to SMEs. And because of that, SMEs can also receive some financing, which is not debt enabled, if you would call it that way. And one of the best examples in that space is .com Zambia, which issued out a first public offer. Okay. And then we also have initiatives where we interact with development finance institutions to unlock certain resources that they have. This is development cooperation funds. So we had Ministry of Finance from Finland, which started a project called the Accelerated Growth for Small and Medium Enterprises, or AGS, which was then financing SMEs by buying them productive or commodities that they needed to unlock their businesses. So we're buying irrigation equipment, tractors, or whatever it may be. And of course, we also worked with, starting from 2021, we also worked with institutions such as the banks. We had a conversation. And in that space, the real issue, and Mr. Mwanza will speak to this, I'm sure, very, very soon. The real issue is around the cost of the financing from the SME's point of view. Our interest rates are perceived to be very high. And from a business perspective, looking at it as someone who may be interested to start a business in Zambia, when you approach the financial institutions, the numbers don't seem to be very favorable. 20% or whatever it is for a small business may not be the right space, right? Internationally, people will show you that probably if you're starting a business and you're being financed with interest rates below 5%, your business is more likely to grow. Of
Yes.
course, we have a different dynamic in Zambia, and we have to appreciate that the banks also need to make a margin. They're also businesses.
Yes, yes.
And so it's now about how to de-risk, and that's where we talked about the credit guarantees, of course. And then I mentioned the development finance institutions. We have found various partners in that space, and through support or through collaboration, we continue to unlock opportunities in that space. The last one that I'll mention is the insurance products,
Yes.
which are also critical, because when someone is looking to finance a business or to start a business, they are thinking about the risk. And one of the spaces which used to suffer a lot from this is the agriculture sector, because there were no insurance products that used to favor agriculture, especially for the smallholder farmers and the emergent farmers. And through advocacy, through collaborations with the partners who are here and many others who are out there, we have begun to see more products that are being created for agriculture and for small businesses, for SMEs, so that they could start their business with the confidence that once a risk matures, they'll be able to still recover something.
Thank you very much. Thank you for those insightful. We can see that a lot is happening in the space. And I want to quickly move to Citizen Economic Empowerment Commission, CEC. And everyone knows obviously about CEC because of the products that you offer. But my question, however, reads: many MSMEs receive empowerment support from yourselves, but we've seen most of them struggle to grow beyond the startup stage. So what specific programs is CEC currently implementing that perhaps is helping for small businesses to increase production and grow beyond startup stages?
Thank you very much. First and foremost, I wanted to maybe touch on our mandate.
Yes.
Our mandate is to provide broad-based economic empowerment to the targeted citizens and enterprises.
Yes.
What do we mean? We are looking at the historically marginalized citizens by region.
Yes.
And then we are trying to bring them closer in the participation or in the local economy. So what we have done as the commission is that we have categorized in terms of participation, the social distribution. We are looking at 40% of these empowerment programs should go to the women. And then 40% of these empowerment programs should go towards the youths.
The youths.
And then 5% of the empowerment program should go to persons with disability.
Okay.
And the remainder goes to the men.
Okay.
Those at above 35. So what we are saying is that we are also looking at the equitability of empowerment programs. So what we are saying is that when the new management and the board came into place, we did an analysis that 35% of the empowerment programs, they were going towards along the line of rail. So what we did as the commission, we came up with a policy of about at least 85% of these funded projects should go towards rural areas.
Yes.
Why do we do so? We are looking at the rural industrialization program, which the government is promoting in line with the National Development Program. Currently, we have the 8th National Development Program.
Yes.
And we are in the process of developing the 9th National Development Program. So what we are doing around that is that we are looking at each district. We look at the comparative and competitive advantage in that particular district. Let me cite an example. Skongo, we are currently coming up with a rice processing plant in Skongo using a cooperative model.
Okay.
working closely with our line ministry, Ministry of Small, Medium and Enterprise Development.
Yeah.
So why are we doing the cooperative model? We are trying to, we are noticing that the off-taker model
Mm-hmm.
hasn't benefited the local citizens,
Mm-hmm.
in the sense that the off-taker has an upper hand in terms of determining the price.
Okay.
But the model that we are using is the cooperative model, in the sense that we are supporting on the upstream support in terms of setting up an industry, and also the backstream support in terms of making sure that we support them. Like if we are looking at rice production that I'm just from mentioning, is that we have supported the cooperatives with mechanization,
Okay.
so that they can produce and meet the demand of the production capacity of the plant.
Okay.
So
Okay.
why have we done so? If you look at Skongo produces 50% of the rice produced in Western Province. Is produced in the Nyengwe Plains.
Yeah.
And then they have been, historically, they have been exporting the rice in its raw form to these other neighboring districts. Them, they just sell. But what we are trying to do, Skongo is just where the plant is being set up, is at 35 k's to the border. We are bordering with Angola.
Yeah.
We have these bilateral agreements that we have signed, but we are not meaningfully utilizing them. So if you look at Angola, they are importing their rice as far as Burma, India, Brazil.
Yes.
And yet we're just neighboring with Angola. So what we have done, and also working with ZDA, and then also other partners like Zaki, we are preparing these cooperatives, the SMEs, in terms of export readiness.
Okay.
So one of the critical things that I needed also to mention was that the quality proposition of what is being produced, we are onboarding that. Working with ZABS, we ensure that the products that are being produced, they are export ready. So that is one of the critical things that we are trying to look at.
Great.
And then another citing example that I would also give is in Shangombo there. We are also doing a beef. We are doing beef in Shangombo. We are doing beef value chain in Namwala, in Kalabo, and also Chikanta area. So why are we doing these things? Because the government is now preparing the citizens to prepare themselves to export the beef to Angola, to DRC. So we're trying to set up abattoirs around those areas.
Okay.
So that is the idea. So I wanted to also touch base of why the commission was established. One of the things that the commission was established is to address these issues of high cost of borrowing. So if you look at how the commission was established, there was to be a creation of a fund, which we haven't actualized.
Okay.
So if you have seen that we have fragmented empowerment programs, that hasn't brought meaningful development in our country. One critical thing that we should always advocate for is that this country should be driven by the Zambians.
Yeah.
So we should try by all means, in as much as we are promoting foreign direct investment, we should promote domestic investment.
Yes.
Domestic investment, money will remain in here, will be plowed back in here. It will not be taken out of the country. So what we are doing is that if you look at the offering that we have different types of products that we are offering to both the targeted citizens and the enterprises. We have products that we have lined out for microfinance. Recently, we issued a call for Misepela. Over 40,000 youths applied. That Misepela product was focusing largely on the youths. And then
Is it
out
still running?
it's still running.
Okay.
Yeah, we've just winded up. We are going to the next phase.
Okay.
So out of that, 1,622 benefited from the same program. But one of the critical things
Mm-hmm.
that we noticed that 54% of the applicants,
Yeah.
they had poor credit history.
Okay.
So that is one of the things that we need to critically address. And it's good that Mr. Mwanza is here, the Bankers Association of Zambia.
Mm-hmm.
So what we are advocating for as the commission is that we are working with institutions like APSA, Zanaco,
Yeah.
so that we broaden up the financial access to finance.
Yes.
So the critical thing here is to broaden the access to finance.
Yeah.
By broadening the access to finance, it will also leverage of what we have so far been funded by the government in terms of the funding that we have been receiving from the government, which is in the upwards of
Thank
2
you.
billion.
Thank you. Let
Thank
me
you.
just, because you've touched on, before I come to ZDA, you touched on something that I would want quickly to throw on BOZ. The issue of cost of finance, I think it is also a major constraining factor, especially for MSMEs who want to access finance. So what is your take on the prevailing cost of finance in Zambia, and what is the bank doing or the banking sector doing about it?
Well, it's a genuine concern when it comes to the cost of lending. They're averaging around 27% right now.
Mm-hmm.
The question is, what is the return on capital on an average business in Zambia?
Mm-hmm.
Can you have your return on your capital of above 10%? Highly unlikely. I think that's where the debate comes in to say if your return is maybe 10% and you're borrowing at 27%, it becomes difficult, right?
Yeah.
So it's a genuine concern, but I think it's being addressed from multiple factors.
Mm-hmm.
As we stabilize the economy, as the sovereign risks drop, I think we should start seeing some unwinding effects, and we should start seeing the pressure points in terms of what goes into the computation of interest.
Yes.
I think is scaling down. We've seen inflation is in the lower band. It's,
Yes.
I think, maintained at 6.5. 6.5 July. So when you have stable macros like inflation, stable kwacha, some of the unwinding effects taking effect,
Mm-hmm.
Obviously we can see that. I think we can see a future where some of these benefits will start down filtering into the real economy and into the conversation of where interest should be. Banks obviously also must make some money.
Yes,
We
of
must
course.
defend them, and they must make reasonable margins
Reasonable
for them to.
I think the term is reasonable margins.
Correct, reasonable margins for them to protect shareholder capital, create
Yes.
financial sector stability.
Mhm.
But having said that, one of the things that we are happy about is that maybe outside government linked program like the CEC, anywhere else you are going to borrow, if it's a microfinance
Mhm.
or whichever point you're going to borrow, apart from maybe the group savings, this is a village savings bank, you will find that on average, the cost of borrowing from a commercial bank in Zambia is much, much, much lower than what you would borrow
Mhm.
on a microfinance institution. And I'm happy to say that despite all that, I think when you look at the aggregate lending book to SMEs, the commercial banks still have a higher percentage,
Mhm.
a higher number compared to all these interventions. And you've seen that there's a lot of focus on women-led businesses. There's a lot of focus on youth-led businesses. There's a lot of focus on capacity building programs.
Yes.
I think the WIAC are always busy to train businesses, especially the women-led businesses. Banks have got SME relationship programs to train, build capacity internally in terms of their staff, build capacity of their SMEs.
Mhm.
Even I think ZDA mentioned the trade exhibition.
Yeah.
As they look for market outside, I think banks have participated in sponsoring some of their viable SMEs to go and expose themselves and showcase whatever they might be producing. And we've been challenged by the regulator all the time that
Yeah.
banks must also show cause as to how many export-led businesses they are supporting.
Yeah.
We've been challenged by the central bank to show how many women-led businesses they are supporting. So that information is flowing to the central bank, which shows an aggregate support of anything between 20 to 30% in terms of women-led businesses, a similar number for youth-led businesses. So yes, money is flowing. The conversation around interest is extremely important, but I think we must be happy that the economy is improving, the macros are improving. We can't predict, but I'm sure we should start seeing some of the benefits filtering into the economy.
Okay, and we are running out of time, so let me end with ZDA, because I think CEC mentioned a point to say there is need also to promote locals perhaps to own businesses, in as much as we are promoting or incentivizing foreign direct investment. So I wanted to get from you, what are some of the specific incentives or programs that you have that is directly promoting local owned businesses or even foreign direct investments, Ms. Manda?
I suspected that question was going to come. It always does. I mean, allow me to state, so the incentive structure that's in place, right? It caters to both domestic and foreign investors. And we have an investment threshold that you have to meet in order for you to qualify.
Okay.
So for locally owned businesses, 100% shareholding Zambian, the
Yes.
investment threshold is actually much lower for you to be able to access those incentives. It's $50,000. And then we also have tiers. So if you have a local business where the shareholding is between more than 25% to, sorry, is it more than 50? Sorry, more than 50%, right? That's the citizen influenced company, right? Even there, the threshold for you to qualify for incentives is lower. It's $100,000. And if you have, say, a joint venture where there's still some domestic ownership, Zambians involved in that business, and the shareholding is between just slightly above 25% to 50%. There again, the threshold is much lower. And if you're purely foreign, right, the investment criteria, the threshold for you to access incentives is much higher. It's $1 million. So you can see the way it's been designed. It's been done in a way to also support the businesses you talked about in agriculture, in agro-processing, in manufacturing more broadly, which is quite incentivized, as earlier alluded to by Mr. Mwanza as well. And just to come to agriculture, a number of incentives to apply to both domestic and foreign. So the corporate income tax in agriculture, for instance, is lower. It's 10%.
10%.
Yes, whereas the standard is 30%. When you look at agro-processing, it's also 10%. Mineral processing, because we want to promote value addition, much lower, 15%. So there's several efforts to support businesses, both domestic and foreign. And just to touch a little bit on the domestic businesses in terms of the broader support we provide beyond the incentives. As alluded to, we work with CEEC, we work with the ministry, we support, your small, medium enterprises with high growth potential, linking them, one, to domestic markets, so your supermarket chain stores.
Yes.
Beyond that, we've talked about building them in terms of being export ready, even just supporting them to be able to have the documentation that would make them be more attractive to potential partners. So supporting them to go into joint ventures with foreign investors and even other domestic investors, right? That could be much bigger, so that they can tap into the capacity they have, the technology and the capital to grow their own businesses. So we support them in terms of how to prepare, your pitch deck, issues of entrepreneurship. There's a lot of capacity building that goes into that. And coming to the lower level, constituency development fund, we've actually been working with the local authorities as well, because the CDF is aimed to stimulate economic activities at that local level. So it's targeting the constituents there to provide different services in terms of building of the 3x3 classrooms, the doing the bridges. So we work with the potential beneficiaries to help build capacity, so that then as they apply for these grants or various projects, that they're able to execute them in a way that will ensure that there's quality, there's efficiency, and that we're really delivering value for money. So there's a lot more that ZDA does.
Exactly.
And allow me to just state, even when it comes to incentives, I mean, one of the key things is how you design your incentives. It's
Yes.
how you monitor, how you implement them, evaluate.
Yeah.
So the way most of the incentives are designed that are under ZDA, they are aligned with what OECD recommends,
Okay.
which are expenditure based. And I
Okay.
alluded to this earlier.
Mhm.
So we are, promoting accelerated depreciation up to 100%.
Mhm.
So allowing to reduce, what that does essentially, it means you can, in the early years, right, you can have a higher share of your capital investment deducted from your taxable income,
Okay.
essentially improving your early year
Yeah.
cash flows.
Yeah.
So that helps, the project viability. These are expenditure-based incentives that, as I said, OECD recommends. There's, customs duty waiver on key equipment. As you are setting up, we facilitate, access to those incentives so that your cost of getting the capital equipment that you need is significantly reduced. And then we have spatial economic zones as well, your multi-facility economic zones, your industrial parks, where one, you would have access to service land, a delineated area where the cost of doing business is much lower, where there's a facilitation I talked about in terms of access to all the permits, approvals that you need. ZDA is on hand to support working with the relevant institutions. But also to state that in those zones, part of what we try to do with the incentives is to stimulate export-led industrialization. So if you set up in the zones, then if you're exporting, then you would be able to have access to some tax holiday on the income coming from exports, on the dividends coming from export. And the idea is, as we all appreciate, our export basket has been quite concentrated for a long time. And that's a huge risk when you have, the commodity price cycles, as we know them. So to diversify, to encourage exports of these other, non-traditional goods, as Mr. Monzo is alluding to, these zones have been established to promote that. So the incentives perform various functions, policy goals, employment creation is huge for us. Even as we issue investment licenses, we monitor. Before an investment license is renewed, we look at what has been the contribution to employment that has been actualized versus what was committed, what was pledged. What has been the linkages with the local economy in terms of suppliers of goods and services that they are, supporting. Corporate social responsibility, we go as far as looking at that as well. So just to reassure the public that there are really efforts to support both domestic and foreign investments.
All right. So thank you very much. On that note, I know we have a lot of information to discuss, but I think you can still visit the institutions represented here, the various websites. You can visit CEC for more information. You can visit ZDA, can visit BOZ, as well as Minister of Medium and Small Enterprise. So from now, we call it a day, and please, like I said, you can visit again our stand. We are in Jubilee Hall, stand number 23, and you can get more of discussion like we are just from having in terms of how we are interpreting this year's theme, which is fostering trade and investment. Thank you very much.